Hey everyone, my name is Gaurav and welcome back to my channel. Unlike many people who entered the market during 2020 bull run, I entered just before that. So 3-4 months before 2020 crash, around 2019 end, I entered into the market. And within 3 to 4 months, my portfolio almost crashed because of the COVID. And then 2020 bull market came. I instead of compounding or making a fresh investment, I was just trying to recover my losses. So I was waiting on some of the stock which weren't moving, hoping that the stock will move. I never had a proper process. I kept searching for new ideas, new process, new scanner. I even made around 7x in ATGL without any conviction, on a borrowed conviction, on a pathetic 1% of my portfolio size. So yes, I was making money, but it was pretty random. I didn't have any defined process, no clarity, and it was pretty much messed up. Now fast forward, as of today, things are pretty much different. I now have a defined process. I have a routine. I have a scanning mechanism. I exactly know for the core stock what things I need to look fundamentally or technically. So things have been different now. And during this journey, I realized something very important, that my result didn't change because of one big breakthrough. Okay, but it was a culmination of many small improvements or upgrade which I did in my process, and that has resulted into a mature market participant and has changed my portfolio tremendously. So today in this video, I will share those 10 upgrades that fixed my process, improved my strike rate, and build my confidence in this market. Let's start. The first one is read books like your net worth depends on it. I sincerely owe a big part of my investment journey to the books. So imagine you wanted to learn something, right? And you don't have an access to people or mentors, right? Literally a 500 rupees book can change your life. So don't read book to get inspired or just randomly skimming it through, right? Read a book to fix your problem. I read How to Make Money in Stocks to understand weekly charts. That single concept helped me to hold multiple multi-baggers instead of selling them early. Then I read One Up on Wall Street by Peter Lynch that basically taught me how to frame a portfolio and focus only on high growth businesses. And then I went to Van Ketha for position sizing. Then my problem was, mindsets and psychology. So I switched to Disciplined Traders or Thinking in Bets by Annie Duke. At this point, I can literally give you hundreds of names and ideas. But that's not the point. The point is, you need to understand the importance of reading book. First of all, list down your problem. So problem could be A, B, C, D, right? And based on that, start identifying those books and start reading those books. If you need any help in terms of, identifying those books, reach out to me. Put in the comment. I'll definitely try to look for those books for you. But then put an effort to read those books, fix your problem instead of relying on, some random social media or some random courses. And that's when you start being just a reader, you start becoming a better investor and trader. Because the more you read, your knowledge improves. And when your knowledge improves, your decision making skill improves. And when your decision making skill improves, you start making better investment ideas in the market. And hence your portfolio compounds. This, I'll go to the next one. The next one is earning breakout triggers or catalyst. Most people look at the earning in very lazy way. So they simply open a screener or any random tool and they look YOY growth or quarterly growth. And they assume that company is doing well because there is a good growth in that. But quite often you have seen that even if the company has given a good result, the company price action collapsed right next day. So very early in my journey, I have understood the importance of understanding the catalyst or key trigger behind the earning. And even if you don't know anything about fundamental analysis, put an effort to learn this. Like if the company is growing, what is the key reason behind that growth? And also whether the growth is sustainable or not. So whether the company is growing because the margin expanding or the new product has been launched or company is going into a new geography, there is a fresh order book and the execution of that order book is quite highly likely. So those bit, you need to understand what is the key trigger behind the company's growth. Best tool for you to understand this is using a con call. So start reading and understanding the con call. So this is the window you want to work in. First the fundamental, then go for the chart and price actions, and finally your entry, position risk and everything else, right? So simple rule is that you don't need to chase earning. Identify the key earning triggers. Look for the sustainability of the catalyst and let the price action confirms that. With this, let's go to the third one. So the next one is ability to narrow down your universe from multiple names to 3 to 5 names. Today's market information is no more edge. The real edge is creating a concentrated watch list. And that itself is an art. So most investors, they don't lose money because they pick a bad stock. They lose money because they have been tracking too many names. And because of that caused a lot of confusions. and they dilute their position size. Now everything changed when I started forcing myself to take a 1 or 2 bet in swing trading, because when you start tracking lesser name, you understand the business very well, you follow all the earning and con call very well, you read price action accurately, most important, you act decisively. And this applies both for core and swing. I have already discussed in detail how to do a scanning and narrow down your watch list in these 2 videos, so you can definitely check it out. Okay, so the rule is reduce your noise by reducing your watch list, keeping it quite concentrated, and operate with 3 to 5 high conviction name with clarity. Okay, with this, let's go to the next one. The next one is 52-week high or 6-month high tracker. So generally people do ask me, which is the best scanner or filter available out there to increase your strike rate and hence impacting your portfolio. I will always say 20% or 30% from 52-week high. This is one of the most simplest yet most powerful filter I use. All multi-baggers, without any exception, they start their journey from 52-week high. Right, so unless stock hit 52-week high, it won't make a multi-bagger, right? And that is why I actively track 52-week high and 6-month high names. But one important caveat here, that you are not tracking these names blindly. Okay, so you have to track these names, but then your overall structure comes in a picture. So for me, this is my setup, right? Irrespective of the names, I will definitely look for the price consolidation, prior uptrend, base formation, pocket pivots, consolidation towards the right. But I would want these patterns are near to this 52-week high, because when the stock is near to its 52-week high, it means accumulation is already happening. A lot of institutions and big names are entering into those stocks. Rule is very simple: don't hunt stocks in the lows. Track stocks which are near to their highs, maybe 3 months, 6 months, preferably 52-week highs. The next one is sectoral money flow. One mistake which I did early in my journey, especially in swing trading, that I used to look the stock in isolation. So when the stock move, it doesn't move randomly. It moves because there is a context behind it. So it could be fundamental, and fundamental is because of the sector, right? So sector tailwind must align with your stock, especially in swing trading, because when money flows into a sector because of some tailwind, then multiple stocks start moving together. Pullback become quite shallow and breakout sustains more often. So what do I track? I track sector relative strength versus the index using a relative strength tool. Then you can definitely look for the volume expansion across the multiple stock. You can track as separate indexes in which phase the sector is, and pocket pivot and accumulation signs. Tools like Screener, Market Split, Trading View indicators. These tools can help you to identify the right sectors. Plan your best stock in your best sector, especially in swing trading where allocation is quite high. The next bit which I wanted to talk about is backtesting strategies, right? This is again an important concept one should learn, especially if you have a techno-funda approach. So for me, as I do a techno-funda approach, I want to have a system which is very well backtested. Whether the strategy of 52-week high or whether the strategy of tight consolidation right side base or inside bars, all of these strategies I have already tested, and I pretty much know their long-term strike rate. This is where my conviction comes from. So many people talk about a strategy, but have they really tested it? Do you really know in which market your strategy will work and in which market your strategy won't work? I have spent years manually backtesting a lot of stocks. So bar by bar, stock by stock, and all the market, be it Indian, US market, because I trade in both the markets. Now this one is definitely a boring and slow process, but trust me, it helps you a lot. After backtesting, I understood that my strike rate in long term won't be more than 40 to 50%. I might get a lot of losing streaks. It means there will be a period of phase. If I keep on trading, I can get more than 10 to 12 losing streaks. But there will be a scenario, so there will be a market where few of my big winners can literally take my portfolio to different trajectory. I know this because of my backtesting strategy. I have nothing to worry about, irrespective of the market. All I have to do is my fearless execution as per the trade happens. Now there is a method to do using a ChatGPT. If you don't have a knowledge of coding, then do a bar by bar backtesting. That is the best way to do it. But if you want to create a strategy in a trading view, I will create a separate video using a ChatGPT how to create the spine script. Okay. Next one which I have is creating a model book. So this one important routine which I learned from Kristen Kulamagi's streams. So backtest builds your confidence, but creating a model book that creates a execution. So most traders sometimes miss to identify some good setups in real time, and they are not fast enough because they don't have model book in place. So if you see this, I have created a model book based on my setup. Every time whenever I see clean high quality setup with a strong base, tight price action, volume contraction and proper context, I immediately screenshot it and keep it. And then later on down the line, 3-4 months, I want to see what happened to that setup. But it's good to have those model book created to keep your brain and eyes trained. So over the time, this particular model book will become a database, right? Your A plus setup, B plus setup, and whenever a similar setup appears in future, you can immediately spot it. Okay, the next one is tracking big money or HNI activity. So though I trade in a small cap and micro cap, and a lot of these name I extract from tracking the block deals and bulk deals. Now, so if you heard about Monish Pabrai, he's called himself as a shameless cloner, right? But he cloned the concepts or attributes or characteristics from Warren Buffett, but he never clones the stocks. But let me be very clear upfront that tracking big money is not about copying the trades. Extract the name but make it your own. So why do I track these big money at all? First of all, because it helps me to discover some quality names. For example, some of the names like Xpro, Carousel, Fruit and Pharma, I have extracted by tracking this bulk of block deals. Okay. First of all, I try to identify the catalyst because that is important for me. If I understood the catalyst, then I look for the next base formation. So sometime when these big names enter into the stock and when the filing happen, the stock moves suddenly, 50, 60, 70% immediately, especially in bull market. The right point for us to enter is to look for the stock to come back to its EMA, let the pullback happen, let it form a base or a consolidation to near its EMA. Look for a favorable risk and reward, and tools like a screener and trend line for bulk and block alerts, they help us, right? The next one which I have is risk and position size. Now, if you really want to survive in the market, I think this is the most important factor which you need to learn. It's the least interesting topic when you're starting your journey. But slowly and eventually when you get mature in the market, you will understand that how important this particular concept is, risk management and position sizing, and why every successful trader, they only talk about risk management. What exactly the risk management or position sizing means. So before I answer this, if you know this quote from Mark Douglas that anything can happen in this market. Okay, this is a big mental shift. The moment I take a trade, if I know that tomorrow anything can happen with my trade, it can go up, it can go down, it can go sideways. So what is the first thing which you'll do? Try to control your worst case, right? And that is what risk management is. It means that if trade goes against you, right? If tomorrow something happen and trade doesn't go, tomorrow's candle doesn't come positive, it goes negative, how much you are going to lose it, right? And there is entire concepts and formulas and everything behind it. I'll definitely create a very detailed video on this one. So my rules are very simple. Risk per trade, for example, 4% of max SL, right? Max risk exposure and portfolio basis is 1%, shouldn't be more than 1%. Time stop I generally use for the 10 days, and maximum I have 3 to 4 position in US market and Indian market 1 or 2 with 20% cash buffer. Generally I keep 10 to 12% or Indian market and 20% in US market as a cash buffer. And active trade I generally cap it to 2 to 4 in US market, India hardly 1 or 2 trades. These rules are very important because these rules will keep you mentally sane and your confidence high even if the market is not doing well. Okay, with this let's go to the next one. And the last one which I have is independent thinking. If there is a one skill you must develop as an investor, then that should be ability to think independently. So I am a small cap and micro cap investor, right? For the core stocks, and many a times the informations are quite limited for these stocks. And independent thinking, it will always help you in two ways. So first of all, if you're on wrong in your bet, be it a swing trade or be it a core, you will exactly know why. And if you're right, then you can hold with confidence because irrespective of what market or people says, you will have conviction to hold that stock. And this has happened many times. Time when I hold a stock, and even if a stock has came down, since fundamentally I have done my research, I tend to hold it, and from there stock has gone to more than 4 or 5x. So that's why borrowed conviction never helps. Always have independent thinking. Okay, with this we have come to the end of the video. If you take away just one thing from this video, just understand that big change in portfolio doesn't come from one big decision which you take today or tomorrow. It comes from a small improvement which you make throughout your investment journey. All the factor which I have shared is quite easy to implement. So try those. If you want me to go into detail any of these topics, let me know. I'll happy to do it. If this video helped, hit that like and subscribe button, and I'll see you in the next one. Bye.